have with us A. Bala Subramaniam, of course, the Managing Director and CEO at Aditya Birla Sun Life AMC. Bala, hi, good to be speaking with you. Surprise, shocked, disbelief? What's the mood right now, you believe?
So, of course, you can put all the three, given the fact the outcome which is coming in.
You're always smiling, irrespective of whatever.
Yeah, we have to stay bullish in the market, of course, right? I think the way I see is the market was getting constructed. The way I think the people are looking at the market while investing, highest political stability was given high marks. While, of course, the fundamental economy is getting better, and very other things are happening which will actually make the economy more sustainable. At the same time, we always give higher weightages for the political stability. Even now, political stability is going to be there. It's not that it's not there. But the fact is, the market had some expectations that there will be a thumbing winning could come for even the ruling party, which of course has fallen short of the expectations. But at the same time, there is not ruling out the same government getting formed and ruling this country for the next 5 years. It's not getting ruled out. But because there is a shortfall, that I think the correction we have seen. Second is, always been India market has got most of the returns got front loaded. If you look at the last 2 years, most of the return which otherwise would have come over a period of 5 years all got front loaded, and all of us were expecting some correction was not coming. Valuations were always there was a strong feeling is the valuation is justified and so on and so forth. But that's something also got corrected. The way I see is today's market correction is in all probability would have actually removed the froth whether the other would have been in the market by way of excess valuations, and therefore now getting into the reasonable valuation from the broader market perspective. But I think once we know what the exact outcome is going to be end of the day and how the government is going to get formed, and given the fact now after a very long time of 2 terms we are coming back to the coalition government, therefore to the extent whether there will be any question mark in terms of fast forwarding the economic growth, I have been of the opinion the next 5 years will probably see a lot of things will get fast forwarded, given the fact last 2 years of experience, two terms of experience will give more strength to the government to fast forward a lot of stuff. Maybe that's something we'll have to just make an assumption whether it will be fast forwarded or probably will be a stable growth in the economy that we can see. But otherwise, fundamental economy continues to remain very strong. Therefore, the market volatility, having seen multiple cycles, this market volatility was bound to be there, never came the last 2 years for a variety of reasons. That has come, I think, is good for longer term market benefit.
Yeah, it's a healthy shake-off, gets rid of the weaker hands. I mean, look at the screen right now. You've got a Unilever, which is spiked up about 6%. Dabur is up 5%. Colgate is up 4.5%. Britannia, United Spirits, by the way, that's in high spirits for sure. A 4% uptick is what you're seeing there. And the list of movers today in the recovery that the market has seen from the lows, Hero MotoCorp, that's up 3.5% right now. The Tata Consumer, which is up 1%. So clearly the defensive / FMCG tilt in the market is very, very evident right now. But Bala, with today's damage, while we may have recovered from the day's lows, but we're still down a good 1,150 points on the index alone. And I'm not even talking about individual stocks or individual portfolios, how much they have erased today. Is a bottom in place now? Or do you think that if it is the current party, the current majority government continues, not with such a strong majority, we are bound to see another such day of a shake-off in the markets?
I think it's more or less, nowadays I've seen, whenever the market corrects, it all comes in 1 or 2 days only. Yesterday we saw the pullback, today we saw big corrections. I think historically if you look at it, whenever the market hit the low circuit, I'm talking about even the period of 2009 period I have seen when there is a India-China story was going on that got disappointed. Then we saw actually single day market falling by 10%, and that was the only day it falls, and rest of the days actually come back to normal. People start looking at the going forward, what will happen, how the decisions will be taken, and how the economic growth will be driven, how the company's earnings will come back, and so on and so forth. Therefore, going by that principles, I would assume today's market has fallen excess of what one would have thought about it. And also given the fact there has been a concern in the market that F&O outstanding positions are very large. Today, I would say 50 to 60% of the fall was on account of the margin calls. The moment stock price falls, and the exchange has become so efficient. Margin call comes, you sell the stocks, irrespective of how fundamental the strong companies are strong. So that's the way the market behaves. Therefore, my own belief is today's fall has things more or less done. But now you see the volatility continuing. Still, such time we actually come to a firm decision in terms of how government will be formed, what kind of ministry is being given, and what the roadmap is going to be given in terms of manifesto what they are given in the party and how they are going to be get rolled out And those, I think, will start determining the going forward. But valuation concern which was there, on the basis of which people are doing the rebalance in the portfolio, probably will see the people doing a rebalance in the portfolio, moving from low valuation to high valuation, low valuations. Those kind of things, I think we'll see the trend changing. But otherwise, broadly from a market point of view, once you see an opportunity, as long as you have a view that next 5 years, probably have to take a view, given the fact that companies are very strong on balance sheet, low leverage, they'll have enough leg room for them to leverage and build the business and put the private capex could go up. At the same time, earnings are not going to get disappointed given the fact we are seeing broadly the economic momentum continues.
So Bala, market had become Humpty Dumpty in small cap stocks and the Humpty Dumptys had a great fall. What is good here is that we've recovered from the days low, and if you look at the 1 month change for the market, it is down only 1%. So much so for the election volatility. For the index, now individual stocks will get whacked, depending on the positioning and depending on where the things are and where the mood point is. What you got to ask yourself is there, what changes permanently, what changes temporary, where prices have changed because the change is permanent or the change is temporary. Where the change is temporary and price change has happened, you should be a buyer. But in some policy stocks, some would say that the sentiment has changed. PSU leadership in one day has lost its mojo. PFC, REC, BL, BML, they are down 20 to 25%. Have PSU stocks topped out for a long period of time now?
I doubt, Nikunj, for one simple factor, all of them have been becoming efficient. Leave aside today's fall. I think if you look at the reality, they are becoming very strong on balance sheet. They have been the largest contributor to the success of the Indian economic growth by way of sheer presence they have in the respective segment. And second is each one of them are leader in the respective segment. And despite the all have gone up so much, you cannot say that they are actually overvalued given the fact they were undervalued for so long. So the last one and a half years of pullback, I would probably say partly it's a pullback that they would have suffered in the last number of years. But if you look at the leadership of all these POCs companies have got changed big time. The next generation of leadership is coming and they are driving for the future growth very aggressively. Therefore, it's very difficult to assume that the today's fall is actually put an end to that story.
What are fund managers buying today?
I think that wherever the valuations are justifiable, whether it is the banking sectors, whether capital goods sectors, even for that matter FMG sectors, we have been of course turning positive on contra call we took on FMG sectors few months back, is also paying off. And we are in the middle path. Neither we are taking a too aggressive position or we are taking a too conservative position or building a portfolio.
But in your, sorry, go ahead.
No, I'm saying it's a good time for the fund managers, right? Because whatever they were buying yesterday, because of the fact that the fundamentals are strong, it's available 20-30% cheaper right now. So why not go ahead and deploy? And Bala, to the point that the SIP flows, do you expect an impact there? Because that was the biggest driving force of the market this time around. FIIs had been selling left, right and center. It was the DII flow which was supporting. You anticipate any sort of nervousness from retail around SIPs now?
So I don't think so. On the contrary, you will see more flows coming in, or rather more participants will come. One of the school of thought that I have, I think after the COVID when the market fell, the people who have been investing in the market directly, they started turning towards mutual funds. And at the same time today as well, the number of people who have been participating in the market directly through the F&O market, through the speculative trades, they would have realized how dangerous it can be if you don't have enough margin. Even if you have margin, if the price fall happens, how he will lose his stocks by way of automatic selling that has been created in the system. So therefore, people would have realized how dangerous it can be. Therefore, such investors, in my view, will actually migrate to mutual funds, they will become SIP investors. On the contrary, I would say the current market fall would be seen as an opportunity for investors to participate more rather than moving away from the market. Historically, we have seen the last 7-8 years, one trend that got emerged from investor behavior point of view. When the market falls, they say it's an opportunity to invest, rather ask a question. Is the time to invest, rather than asking a question, is the time to redeem.
Sure, absolutely. And I think COVID has been great learning that you've got to stay invested in the market because, events come and go, market will do what it has to and it goes up eventually. But Bala, to the point that you were making about PSUs, the froth definitely has come off, but still there's lots of scope in there. I mean, still the stocks could fall a lot more for the valuations to be justified and come to reasonable levels. Within PSUs, how do you now make a distinction, assuming that it's not going to be a majority government or it'll be a slim majority, so to speak?
So So I think wherever there is a regulatory environment for those sectors remains very, very strong. If you take the banking sectors, all the PSU banks comes under the same regulatory environment of the Reserve Bank of India. The same thing if you take power sectors, it comes under the same regulatory environment as any other companies. Wherever there is a regulatory supervision, which actually has been the driving force for all these companies to run more efficiently, at the same time manage their the funding needs of their balance sheet, both from rising capital as well as the leverage, all such things. Wherever there has been a very orderly building of a book, at the same time good leadership is there, I think they will continue to do well. I think at the end of the day, from an India point of view, the core sector which has been the driving force for the economy, I think is going to continue. Nothing is going to change. But definitely the price rise has been quite sharp. Therefore, it's not about the valuation increase. It's about price rise has been so large. The number of people who missed this rally in the PSU's participation have been so large. Therefore, there has always been a feeling of avoiding these companies. Fear of missing out, you can always say it in the form of valuations. Probably this price is correcting in, probably people will wait for more price to get corrected. Therefore, you can enter. You will start seeing people people evaluating these companies from the point of ownership, given the fact that they probably will have a long the period of success they can create in participating in the economic growth. That's why I see it.
Bala, just last question before I let you go. If you had to pick up the top 3 themes right now in the market, despite all the noise which is around, which are the top 3 sectors or themes you'll bet on right now?
I think clearly the banking and financial service sectors will remain. They have gone through a 2.5 years of consolidation period. Second is you'll find capital goods sectors. I think the significant investment being made by both state and central government will continue. Related to the Make in India theme, I think will continue. I don't think there will be any kind of pullback. And third, I also believe that given the fact the last 3 years consumer segment, FMCG segment have gone through the period of consolidation as a sector, we'll also probably see some kind of recognitions coming back from the portfolio management ownership point of view. I think that also will come back.
Okay, Bala, great to speak with you always and get that balanced advice. Thank you so much for taking the time out.
If you like this video, then like, share and subscribe to ET Now.